Hello friends, welcome to my 10 cent. In this video, we will talk about some of the pitfalls and challenges that you need to be aware when you are investing in real estate. But first, let me start off with a story that I recently read off internet. I like the story quite much and I think this story is very contextual about the topic that we are going to discuss today. So here is how it goes. There were three people who lost their jobs and became homeless. Okay? The three people were one, a banker, two, an accountant, and three, a real estate agent. So they walked for some distance and they found a nice bridge and they decided to stay underneath the bridge. Now, the banker found a nice, big, huge cardboard box. So he decided to make that his home. The accountant also found another cardboard box lying nearby. So the accountant thought, a lot of my work is with the banker, so let me stay next to him. So he got his cardboard box and put it next to the banker's cardboard box. So now you have a banker and an accountant with two huge cardboard boxes that they've made their home. Now the real estate agent looks around. He also finds a cardboard box, huge one. But he does not take the cardboard box and put it next to the banker or accountant. Do you know what he did? He takes the cardboard box, cleans it up, does some nice painting, and then puts the cardboard box on top of the cardboard box of the banker and the accountant. And then he slapped a nice big poster. You know what is the poster? Penthouse available in a due development only for professionals. Now friends, I found this story very funny. And also I found a lot of truth in this story. Because I have been associated with real estate sector for last 20 years. And one thing I've learned is, I have never ever seen a bad looking or an inferior looking brochure. I have never seen a real estate project being touted or being positioned as the next best thing to happen and at par with the projects you would see around the world. Every real estate project looks great on brochure. And with that background of the story, today we will look at some of the pitfalls and challenges that you need to be aware when you're investing in real estate. If you look at the pitfalls or challenges in real estate sector, first, building on the story I just told you, you must assume that you will never get what you're being shown in most of the cases. If you're investing in an under construction real estate property, unless it is from an absolutely reputed grade A builder, such as a Hiranandani or a DLF or a Lodha, your chances are that what is being shown is not what you're going to get. You will get perhaps 70 to 80% of what is being shown. And even with grade A builders, often you would find people have a lot of complaints on quality and the way the buildings are shown in picture versus what you get. So first challenge, don't fall in love and don't expect what you get is what is being shown is what you will get. Second problem, real estate sector has a lot of hidden costs. Real estate investments has a lot of hidden costs. Most people, do not realize this. In fact, there is a way by how real estate investments are sold and bought. They will show you a fancy looking brochure. I'm assuming it is an under construction property. You will fall in love with the sample flat. You will fall in love with the brochure. There is always a story about a new infrastructure development that is going to come in that vicinity where the project is located. And you will suddenly be sold a story that you're getting a fantastic, beautiful house of your dreams where there is a lot of potential for appreciation because there is a metro or a highway or an airport or there is some other reason or something coming by. In this whole sales story that you hear, you often forget there are a lot of hidden costs. What are these hidden costs? For starters, government taxes such as stamp duty, registration charges, then there are legal charges. If you have a broker, sometimes a broker is involved. If you're buying a completed property or if you're buying second hand, there is a broker that will definitely be involved. Tomorrow, if you sell the property, there will be a broker involved. Brokers charge between 1 to 2% of the property value. So these are 2 or 3 of the fundamental costs that you will incur. ballpark, I've given a full breakup of the charges in the table. You can also take a print of this and use it for later reference by taking a print of our website, my10thcent.com, where there's a full article on this subject. But coming back, if you look at hidden cost, the absolute starter hidden costs such as stamp duty, registration charges, legal charges, society charges, broker charges, all these put together will come in the ballpark of 8 to 12%. Let's say 10% for simplicity. Is that all the cost is? No. If you are holding real estate for a 10-year period, and why 10 I will tell you in another video of ours. We have talked about real estate cycles extensively. In case you haven't seen that video, the link is there in the description. Please have a look at it. Real estate cycles in India, when we did the analysis, we found that were typically for 10-year duration, 10 years. So if you hold a real estate property for 10 years, which basically means if you have invested in a completed property, you will run it for full 10 years as completed condition. If you've invested in an under construction property, you will have a completed phase of anywhere between 8 years or 6 years or 7 years. Now, in a completed state, more cost starts coming in. What are those costs? For example, society charges. Every apartment that you build or a standalone building, even if you take, are typically in a society format. There are other buildings or unit holders around. So there are monthly society charges. There is definitely going to be repair and maintenance. Your house will demand repair and maintenance. All these put together is another 1 to 2% of your property cost per year. So for a 10-year duration, this alone comes to 20 to 25% of your property cost. So if you invest in real estate with a 10-year horizon, over the cost over and above the property value that you're going to pay is almost 30% to 40%. 10% in the beginning and then a running recurring of 20-25%. Which basically means if the property price appreciates by only 50%, you still haven't made much profit. So these are the hidden costs involved in real estate. Unfortunately, including myself, when we look at investment in real estate, the way we do is, if somebody sells you at something at 5,000 rupees per square feet today, you will sit and calculate and have your educated decisions, and you will try to project where this property could be 5 or 10 years down the line. And if somebody tells you that this will be 10,000 rupees per square feet, you will straight away take 10 minus 5, it's a 100% increase, looks like a good investment. But in reality, it is not, your cost is not 5, your cost is 5 plus 40%, which is almost 7.5. So your profit is not going to be 10 minus 5. So these hidden costs are very important, very critical in the calculation of what returns you will make on your real estate. So it's very important we are aware about it. The purpose of any investment is to deliver profits to you, to grow your wealth. Now, and one of the fundamental requirements of anything to qualify as an investment is, at some point of time, you would look to sell it and book your profits. Otherwise, the profits stay only on paper. In real estate, also, when you're considering real estate as an investment, it's very important to understand the dynamics of selling a real estate property. Real estate is one of the most complicated investments to sell. And this I'm speaking from experience. And if you have sold a property, you will exactly know what I'm telling. If you have to sell a share or break a fixed deposit or a mutual fund unit, it's usually a click of a button or one simple application form you sign and give it and the job is done. In real estate, the process of selling a property can run into months of hard work, where you need a broker, you need to meet multiple people, these people need to come and see your flat, they will like it, they may not like it, then there is negotiation, discussion, then they will give you a token amount, then they will sign something called as an MOU, and after that they will take 30 or 40 days for their home loan to get sanctioned. In the meanwhile, you have to repay your home loan, and on and on and on. Real estate is the worst product from ease of sale perspective. So when you buy, always remember you better get your decision right, because even if you don't like the property, the sheer process of going through the sale is not easy. In fact, if I remember correctly, Warren Buffett had said, your profit is decided when you buy and not when you sell. And I will add a small footnote to this great person's quote. Your profit is also decided only when you sell. Till that point of time, all you have is paper that you have profit. Real estate, when you invest, most people don't factor in the difficulties of sale. And even after you sell, let's not forget the income tax complications and the income tax laws that one needs to comply with. If you sell an equity mutual fund unit, it's very simple, pay 10% tax on the profit and you're done with it. In real estate, you have long-term capital gains or short-term capital gains. There is indexation. There are rules related to reinvestment in another property or a tax-free bonds. So there are a lot of rules associated with it, for which you will need the advice of a professional tax consultant. So the third challenge with real estate, when you compare especially with other investment options, the difficulty of exiting the investment. Another challenge, many people invest in real estate with the premise that real estate is diversification. I don't want so much of exposure to stock markets. I don't have so much of money to be stuck in fixed deposits or debt mutual funds, so I need to have real estate. In fact, real estate will diversify my portfolio. Nothing can be farther from the truth. In our analysis, what we have found is, definitely from the perspective of stock market, real estate is not diversification. Why am I saying that? Let us imagine if the economic sentiments in the country is weak. If there is problems, stock markets will crash. Definitely it will crash. Do you think real estate market will go up? If there are problems in the economy, when people are losing their jobs, when companies are struggling on profitability, do you think real estate sector will go up or down? Real estate and stock market cycles, if you look at historical analysis, have almost moved in tandem. In fact, real estate has a 10-year cycle. Stock markets would have 3 cycles in between. But directionally, there is no diversification. So, investment in real estate to diversify from your stock market exposure is not a really good idea. And lastly, just to recap before the last pitfall, we have seen how the quality problems are there in what you think you will get and what you actually get. We have spoken about the hidden costs. We have spoken about the challenges in selling. We have also spoken now about how real estate is not a diversification. Just to wrap up the challenges, real estate, in my view, is a big commitment. It's a bite too much. So be careful that you're biting to the size that you can swallow. For most people, this is a difficulty. If you are looking at real estate investment versus if you're looking at a stock or a mutual fund, the commitment that is required from you is very large. In the stock or a mutual fund, you can invest as little as 5,000 rupees. And if you get your 5,000 or 50,000 wrong, your life won't end or your life will not have got impacted much. But in real estate, the minimum investment expected will run into 20 to 30 lakhs today, if not more or sometimes crores. So when you make this kind of a commitment, and if you get it wrong, the impact that's going to have on your wealth creation process will run into many years and often decades of the cost of investing. So real estate is a big commitment. That is a challenge. Be careful where you're committing your money to. Having listed these 5 challenges, you may be wondering, am I a negative person from a real estate perspective? Am I asking you to not invest in real estate? Absolutely not. That is not my intention. The purpose of this video and the video prepared before is where I have covered real estate cycle is to give you a 360-degree complete perspective when you look at real estate as an investment. You need to be aware that real estate runs in long cycles of 10 years. There are going to be a lot of complications with hidden cost, the drama related to selling out, And tomorrow, if you have the property that is completed, you want to give it on rent, those challenges. So you need to be aware of all the challenges associated, and hence when you look at making a real estate investment, the returns that you expect cannot be less than 10%, which basically means in 7 years your property price should double. If your property price does not double in the next 7 years, if you don't have that confidence, then the investment that you're considering is not worth your time. You're better off putting that money into equity mutual funds where the capital will grow faster. You can even add gold into it. You will get better return. Now, with this video, I hope you've liked the video. We will be having one more video on this real estate series where we will talk about how to really grow your money investing in real estate. What are some of the strategies available for investing in real estate, keeping in mind the cycles as well as the challenges I just outlined. Stay tuned. If you like, please subscribe to the channel. Please give a like video. Please share it with your friends. The more people listen to a video, the more it motivates us to produce high quality videos. Have a great time. See you.